Hello, guys. We'll be talking about how to find, or rather, how to pick ranges from the higher time frames, how to choose our foundation from the higher time frame. So, in Euro USD, we are on the weekly time frame. So, we can see that price broke structure over here with a bearish move. So now price came to react to what caused the liquidity, to what broke the structure. I mean, but that's not where I'm going to take my case study from. What I'm going to take my case study from is right here. So now you can see that after this minor break of structure, price rallied all the way to this place, and now price is going up. It's going bullish. So now, where do you think price, or rather, where do you think we can find supply that can stop price? So once you come over here, this is how you pick. It's very simple. Just look at these impulsive moves. Look at these impulsive moves and try to find where was the last candle before the impulsive move. Are you getting me? So where was the last candle, the range? You can see it. You can see this range over here. You can see it. It tells you that there was a range there. So that will be your foundation, because you can see this is the weekly time frame. That will be your foundation. That will be your foundation. So if you check, you will see that price came back to that spot and reacted from there. You can see price came back to that spot and reacted from there. So even when price came over here and started to react, don't forget that we when price was coming up, we are in a bullish market. This is the high. We broke it, gave us higher low, higher high, higher low, higher high. So now we are in a higher high now, but we are expecting price on the higher time frame to continue bearishness. So do not forget that even though we are expecting um sales, do not forget that we are having bullish price action in the in the internal structure. Are you getting me? So now, at this reaction, how are you going to pick your zones to kind of know when supply has come into the market? So what we do here, we try to find the signs of bearish order flow. Are you getting me? So now you can see the last point of demand was this bearish candle. You can see it was this bearish candle. That was the last point of that was the last point of demand. Are you seeing it? So now you can see that after the reaction, price did what? Price broke it. Are you getting me? Price broke it. So that gives us the first indication that we're having um order flow of supply right now. So if this is truly a break of demand, a break of control demand, where a break of demand, where is supply going to come from? That's what you ask yourself again. Where is supply going to come from? You can see this whole candle here. That was a candle before. That was a candle created before the break of this demand zone over here. Are you getting me? And also you can also see the candle taking liquidity, gives it more confirmation. So that's the candle. That's the range. That's the range. So this is the foundation. So remember, this is the weekly time frame. So this whole candle, they are formed in a whole week. So you can see after the break of structure, price retraced to this foundation right here. This is the range that broke this holding supply. Are you getting me? So now, even if we go to the lower time frame to still try to, even in this range, you will still see your supply zones inside the range. If you go to the 4 hour time frame. At the 4 hours time frame, where's the spots? Okay. At the 4 hours time frame, you can see this was the whole, this was the range foundation. So now even inside, you can see we had a break of structure over here. Are you getting me? So now you can see, you can clearly see that, you can clearly see the range that caused the break of structure. You can clearly see the range that caused the break of structure. So that will be like our variance one, or our control supply one, then the top. Then at the top, you can see before this impulsive move, you can see this range too. You can see this range too over here. Are you getting me? So now you can see that when price, this was the, from the weekly time frame, this was the holding demand. You can see after the break of structure, price retraced, then came to our point of interest. So that's how you pick important, or rather the strong point of interest in the market. So you bear in mind that even though you took a sell here, even though you were able to take a sell here, market has not turned bearish. Market has not given sign of bearish. Rather, this is the leg holding. This is the leg holding the bullishness. Even though we are reacting at a monthly zone, but this is the leg. So until the break of this leg, before we know that the bearishness is complete. But now, you can see that even if we're able to take a sell, yeah, where we're going to take profits. Are you getting me? So now you now bring your mindset back to the internal structure, the bullish leg. We know that this is the leg holding the bullishness. Are you getting me? And you know that price can easily still bounce from this leg and continue upwards. Are you getting me? This can also happen. So that's why you have to be reactive. We know that we are expecting a total bearishness, but how is the market going to do? You don't know. We don't know how the market is going to do it. That's why we try to follow the footprints of the flow of supply and demand. So now, if you take a trade there, you can see that after this break of structure, based on the bullish perspective, after that break of structure, you see this was the candle. You can see the candle there. So that's the way you pick it. You can see it's very, very clear. It's very clear. You can see the candle over there. You can take it to this place. You can see how price reacted to it. So that's the way you pick your foundation. Are you getting me? You can see how price reacted to it. So we know that, you know, this whole candle here is also a range, but you can't just mark it like this. It's too big. So you can go to the lower time frame to check it. So you can see price reacted there. Even in the daily time frame, even in the daily time frame, you can see you can see this range. You can see this range. First of all, it took liquidity. It took liquidity. You can see the candle. You can see the candle. So you've marked that one. You've marked it. So you can still go further into the lower time frames. This is the 4 hours time frame. This is the whole range of that from the daily time frame. So even in this range, you can follow supply and demand. You can see the the sweep of liquidity. And getting me, you can see that after this candle, after that candle, you can see price. You can see after that doji candle, that was when that bullish move started. Also, you can also see this candle also. It's also important too. But in any case, you can still mark, okay, this candle is this candle was already mitigated. It was already mitigated. Are you seeing it? It was already mitigated. So maybe so this one will be, you can see that price tested, price tested. Okay, price did not test this one. Okay, so it tested this one, this whole range. But in any case, we all know that this whole big circle, the box is the zone. So even though you find you were not able to pinpoint the exact point, but at least in reality, when you are trading, anytime price enters this big zone, let me drag it. Anywhere price immediately price enter, but at least you can still mark from here. Immediately price just starts entering. Immediately price entered this zone, you start looking for trades. You start looking for trades over there. Are you getting me? So that's that. So you can see the way to find supply and demands. It's very, very easy. So after price reacted to this zone, price continued the internal structure bias, which is bullish. But you can see price still reacted to our supply. So the supply holding the supply order flow. You remember that when we started, we saw that the supply that broke this holding the supply that broke this holding demand here, the supply is here. So you can see even when price retraced from this demand, the price reacted to that supply also. So now, so after the break of structure here, this is the first sign, another sign of bearishness. But the real break of structure is here, because that's the overall bullish leg holding price. Are you getting me? But before then, you can see that after the break of structure, where did price come? Price came to this foundation. You can see the candle there. That's where price came to. Price came to this foundation. So it's very, very easy to spot them from the higher time frames. Are you getting me? It's kind the price came to that foundation. Then you can see, so now after the real, the real BOS, after the real BOS, this BOS now tells us that finally um 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 bearish bearishness is confirmed. So you can see after the break of structure, you can see that price came back to retest what broke structure. So you can see the candle there. Now see the candle there. So that's the way you pick that's the way where you pick your foundation. Are you getting me? That's the way you pick your foundation. You can see after price retested it, boom. After price retested it, price started falling. You can even see another foundation here too. But price did not test that one. Even here, you can see this whole range was the range before the impulsive move. You can see that price came to test it. So the way you find your foundation, so you can see after this break of structure, you can see this is the whole move. This is the range. Are you seeing it? That's the range. I can see that price came back to test it. Are you getting me? Price came back to test it. So even here too, after the break of structure, you can see this was the range before the break of structure. That was the range before the break of structure. And you can see price came to retest it. So that's the way you find your foundation. So with this, you'll be able to know where the true supply and demand is, so that you won't be trapped, you won't be looking for so you won't be falling into these traps, even though you are a smart money trader. So that will be all for this video. Thank you.